All right, are we going to roast somebody or are we going to give this guy props? Here we have revealing my entire investment portfolio. Big changes coming soon by Investing Simplified, Professor G. I have never watched a video by this guy before, so I really have no idea what to expect. All right, let's check it out.
I think it's about time that I finally updated you on what my portfolio looks like as of the end of 2024. I'm going to go through each section of my portfolio to show you exactly what I invest in and why, and then I'll also give you exact percentage compared to the rest of the section, but then also compared to the entire portfolio.
15-minute video. These are so hard for me to watch at 1x speed. Because I have very bad ADHD, I like to just get to the point as quickly as possible.
Information with my private Patreon group, along with some few you want to be in on the inside scoop before I announce it here on YouTube.
Daddy needs a new Tesla, so you got to join my Patreon.
My name is Nolan Gouveia. My students call me Professor G, and I made this channel to make investing simplified. I'm going to go over each section individually, and then I'm going to bring together the entire portfolio.
I'm pretty sure that this is a scripted video. Scripted videos, they bother me because they seem too professional. However, I did watch a video by ticker symbol U, and that was a scripted video, which is amazing. So maybe this video will be great too.
Show me their portfolio and give me the percentages based on that portfolio, but really what they're doing is giving me the percentages based off of that one piece of the portfolio. We have to look at the entire thing to make sure that you're balanced correctly. So let's start here with my real estate section. To me, I don't count one's primary residence where you actually currently live as an investment. Now, if you're house hacking or if you are renting out a room or renting out the casita or something like that, or you have an ADU even, that would be something where you're bringing in money with your house. But other than that, if all you're doing is paying down the mortgage and increasing your equity within the home, you're not actually making money from the house.
I remember in August 2020, we were looking for some properties in Miami, in Coconut Grove and Pinecrest. And those properties that we looked at are now about 2.5 times more than what they were previously. Personally, I would prefer to live in Coconut Grove as opposed to Pinecrest because Pinecrest is a little far. But the point is that your house can be an asset.
Kind of a makeshift savings account. And so I do like it. And I do think, you're building equity and it's a great thing to have, obviously. But when I'm talking about investments, I'm talking about something that's going to put money into your pocket, something that's more of an asset in that regard. And so I'm talking about rental properties here. I used to have two rentals. I used to have a short-term rental where I would do Airbnb, and then I have a long-term rental. Both of them have their pros and cons, and it was good for me to go through both different types. But to me, I'm definitely more of a buy and hold investor when I'm talking about stocks and equities. So for me, that long-term real estate, long-term rental is something that's a little bit more in line with my goals and just my amount of time that I have to even work on it.
The problem with rentals is that if you have one bad tenant, it can really screw things up. You really have to be comfortable with the tenant laws and the local jurisdiction and things of that nature because you can get destroyed. One of my close friends, she lives in San Francisco and she bought a few rental properties in Georgia. One of them, she let in a woman who was a professional scammer, and this woman started threatening her and not paying rent and saying that she was going to report my friend to the Department of Buildings and the state and things like that. And it became such a headache that my friend had to pay her to leave the house. But in states like Georgia, unless they've changed the laws, it seems like it's not landlord friendly. I do believe in Arkansas, if you don't pay rent, it's actually criminal. But in other places, you have to be really careful in learning the laws.
The short-term rental, the Airbnb, I could have had a property management company just handle that and I would have gotten a paycheck or whatever every single month, but I didn't really want to do that. I like to be hands-on in whatever I do. So I tried that for about 6 months, maybe 9 months or so. And then I just decided, I don't really like this. I sold out of the house. It was something where I broke even on it. So not the end of the world there. I did learn a lot of things. But in my long-term rental, that one has been amazing. I bought that one in 2019 or so, right before COVID, right before all the price appreciation in homes. So I feel very blessed. I'm very thankful that I was able to get into that before all of that and when the rates were down low. So for me, I definitely see the value of holding a home and having a home and recently being able to rent that thing out and then being able to have a long-term renter is just very, very solid.
One of the other issues is that when you have renters, they're never going to care for your property as much as you care for something when you own it. So that's another thing to take into consideration. I'm not a huge fan of rentals, primarily because if you only own a few properties, there's so much variance that can go wrong if you have one or two bad tenants. But if you have an apartment building or you have hundreds of tenants, then one or two bad tenants is not really going to hurt you. But overall, considering the fees when you buy and sell, and then oftentimes you have mandatory insurance and coverage, I'm not a huge fan of rental properties.
So now is the next section in my 401k/403b. For my university, it's a 403b, but you probably have a 401k or a TSP or something of that nature. This one's pretty simple as well. When you go to look at what types of options you actually have within your retirement account, your 401k or whatever, they're usually...
I wish I could watch this video on 2x speed. It's just very, very difficult for me. I have very bad ADHD.
Bunch of different types of names and there are different types of accounts, a lot of target date funds, maybe S&P 500 funds, some growth, some small cap, some mid cap, and they all have crazy fees. So you have to really look and find which types of accounts you want to invest in, but watch out for those fees. For me, the best one that I found and the one that I usually recommend with my clients is going to be something like a large cap US fund or something that tracks the S&P 500 or the total US stock market.
All right,
for me,
that's fine.
I chose one that tracks
Nothing
the
wrong with
S&P 500, and that's what 100% of my 403b is in.
No
so
problem.
Now for my
That's
next
solid.
retirement account, I also have a Roth IRA. And so I used to invest in the Roth IRA just normally for the first couple of years of having the Roth IRA. And then recently, over the last couple of years, my income has exceeded the threshold that you're allowed to invest directly into the Roth IRA. And so I've been doing the backdoor Roth IRA every single year. For my retirement account specifically,
Ooh.
I definitely just believe...
Ooh, that was nice. Look at the multiple camera angles. I like that. That's fancy. You definitely fancy, Professor G.
In the 3 ETF portfolio that I talk about all the time on this channel. This will just keep building and building until retirement age of over 59 and a half. My 3-fund portfolio consists of a foundational section like the S&P 500 or total stock market index, a less volatile section like a value or dividend ETF, and a more volatile section for higher risk but hopefully
Like
higher
QQQs?
reward like a growth ETF.
Yeah.
Since I have such a large amount going to the foundational portion in the S&P 500 in my 403b, I don't invest in that here in the Roth. So my Roth is pretty boring and mostly split between 2 categories. For dividend/value, I choose SCHD, which is the Schwab US. And then for the growth side, I split between 2 growth ETFs and a Bitcoin ETF. On that side, I have 25% in SCHG, 20% in QQQM, and 5% in the Bitcoin in the Fidelity Wise Origin Bitcoin Fund, FBTC.
I would probably change out SCHD for something like IWM. SCHD underperformed the market over the past year, but even so, it's pretty solid. And I believe it has a relatively high dividend as well. So it's not bad.
Dividend and 50% growth. But in my retirement in total, I'm about 40% foundational, 30% value, 30% growth. So now to the fun one, the taxable brokerage account. And this one, I have the most positions compared to everything else, but it's still pretty light compared to what most people have. So I'm going to tell you from my smallest position all the way to the largest, just absolutely crushing it. And he was building a business that was actually better on paper than Amazon. It was actually doing better in all categories than Amazon. Was about to take over the world. But then the Chinese government came in and just snatched that thing.
Damn, I hate when they do that.
This guy was Jack Ma, and his company is called Alibaba. So at the time when I was investing in this, that company was a behemoth. It just looked like it was going to go crazy and just get bigger and bigger. But then the Chinese government came in and did what they did, and it gave me a crash course in learning that not all governments are the same.
I remember Jack Ma about 4 to 5 years ago. You would see him on the news all the time, see him in press conferences. Now he's just completely disappeared. I don't even know if he's still in China, if he's on house arrest, or if he moved out of China. The heads of successful companies in the United States have a huge influence on politics. They oftentimes influence politics to such an extent that people believe that they're actually creating policy. Someone like Elon Musk. Whereas in China, even if you're the most successful and wealthy entrepreneur in the entire country, you're always going to be second to the government. The government in China can take away everything from you if you fall out of favor with the CCP.
I definitely won't be investing in any individual companies in China or those types of governments ever again. That was a good lesson for me and for my students. In my portfolio, about 0.5% is allocated to Alibaba at this point.
0.5%, why even have it? what's the point? Why even take up the mental space of following the stock if it's going to be less than 1% of your entire portfolio?
Position as far as individual stock within my portfolio. We all know that AI is just booming and is going to continue to
Probably
boom. I want to
Palantir.
get in specifically in the software side of AI, and so I chose Palantir.
Look at that. I was right. Never seen this video before.
So it makes up 2% of my taxable brokerage.
Dude, you should definitely be a lot more aggressive considering that the majority of your other portfolio is in very, very safe investments.
And on November 18th of this year, I told the Patreon group that I'm buying, and many others did the same. In 1 month, we're all up over 21%. The next individual stock in my account here is Disney.
Not a fan.
Again,
Definitely not a fan of that woke policy. I live in Florida, and Governor DeSantis almost took away their special district. They have something called the Reedy Creek Improvement District or something like that near Orlando. Definitely not a fan of Disney. Plus, it's underperformed.
On a lot of this back then when I was really doing more research specifically in individual companies at the time. And since then, I haven't really added to it. Disney makes up about 2.5% of my taxable brokerage. The next stock that I hold is Apple.
All right, that's
I don't need to
solid.
say a lot about Apple here because I'm pretty sure we all know who they are and what they are. They're just going to be a great company for years and years to come. But I do think the next year or two, they're going to trade a little bit sideways as they figure some things out. This stock makes.
Well, why would you feel that? I don't understand. Why would you feel that way? It's had a great 2024. I mean, you don't provide any explanation on why you feel that way, but all right, whatever. It's fine.
Next is probably my favorite company overall, just because I look up to and have learned so much from Warren Buffett.
Okay,
And
BRKB.
this is Berkshire Hathaway.
Okay.
Berkshire makes up about 4% of my brokerage.
I would probably add something like Blackstone, BX, but I'm a huge fan of BRK as well.
25, and even now, because with so much cash sitting off to the side, I know Buffett's poised to make some big moves soon. My largest individual stock is Microsoft.
Okay, great.
They're the clear leader in the world of AI, specifically broadly, and I've invested so much in building out AI and just having their hands in anything that has to do with AI. Along with already having such a sustainable and strong business model from before, they just added this huge piece to the business. They also have so many governmental contracts and such sticky customers that this company is just going to continue to soar. Microsoft makes up 5% of my taxable brokerage.
Okay, no problem with
individual stocks make up 17% of my taxable brokerage. The next position.
I'd probably increase my size in Palantir and Microsoft, but no problem. Let's see what other securities he has in his portfolio.
Is made up of 12% in SCHG. Then I also hold 10% in QQQM. So of my growth ETFs, this makes up 22% of my taxable brokerage. Then I hold VU at 30% of my brokerage. VU is the S&P 500 and is one of my favorite ETFs, but one could also go with SPLG here because it's the same thing except the share price is way, way lower. They both track the S&P 500.
No, VU is fine. No problem.
The dividend portion.
VU is basically the SPY with a lower expense ratio.
And for that, you all know I love SCHD. SCHD makes up 31% of the brokerage account. When you group the correct stocks within the correct categories, it looks like this. 31% in dividend/value, all of that is in SCHD. 32.5% in growth, and that's split up with 10.5% growth stocks and 22% growth ETFs. Then 36.5% in foundational. Berkshire Hathaway and Disney are considered foundational in my opinion, and that's 6.5% in the stocks. And so then I have 30% in VU, or the S&P 500. Next is cryptocurrency. When I first started investing in crypto, it was back in like 2018 or so. And when I first started out, I just really liked to research all the new technology that was coming and specifically all the little altcoins and how they work. I thought that the problems that they're trying to solve were definitely ones worth solving and that they made a good case as to how they could solve them. After many years of research since then, I really only believe in Bitcoin. I do believe in the blockchain technology behind all of this whole crypto space, but specifically Bitcoin is the only one that I've really been adding any money to since the last couple of years. So my largest position here by far is Bitcoin at 72% of the crypto portfolio. My next largest position is Ethereum, and that makes up 15% of the crypto. Next is Cardano, which makes up 8%. And then I hold Chainlink, XRP, Polygon Matic, and VeChain, which makes up about 5% in total. Again, I do very much believe in Bitcoin and in the blockchain technology in general. I've just seen way too many people lose way too much money too quickly and get the rug pulled out from underneath them with pretty much everything else in the crypto space. So I'm still a little bit weary about almost everything else, but I do like Bitcoin. I want you to have cash on the side for some emergencies, and I do the exact same thing. The closer you are to retirement, the more that you should have in cash, or the more that you should have at least outside of the stock market or outside of any risky type of assets, because we want to keep that money as stable as possible. For me, I keep about 6 months worth of living expenses in a high yield savings account. Most of my money I've been dollar cost averaging every single month. But anyway, my high yield savings account makes up about 3% of my entire portfolio, and I'll show you that in a minute. Another category that I have that you may not have, but some of you probably do, is one specifically for my business. Any good business takes part of their profits and reinvests that right back into the business to help it grow or to just make it better for next year. This makes up another 3% or so of my portfolio, as I hold this in a cash account as well.
Okay.
So now I'm going to bring together my entire portfolio and show you everything as far as percentages for the entire portfolio, so you have a better idea of the entire thing. My portfolio looks like this because it works for me and it hits exactly what I'm supposed to in order to hit my goal eventually. Yours might look definitely different than mine, and we both will be right. My high yield savings account makes up 3%. The cash on the side for my business makes up another 3%. The crypto side of the portfolio makes up 12%. Real estate is about 23%. The growth section is 18%. SCHD, or the value/dividend part, is 18% as well. And then foundational for the S&P 500 is 23%. Crypto is never meant to take up that much of my portfolio. But like I said, I've been investing in it for about 6 or 7 years now, and it's appreciated a bunch, especially lately at all-time highs. And so at the end of this bull market, probably sometime in the middle of 2025, I'm going to cut that in half, take those profits, and put that into the 3 ETF portfolio.
Okay.
I'll be adding to my 3 ETF portfolio every month in 2025, and for sure Berkshire Hathaway, Microsoft, and Palantir as well.
Overall, I think it's okay. I think for a guy who's really young, who's probably only about 35 years old, I believe that if he took 100% of his money and invested it in VGT, he would probably outperform this portfolio long term. I think this portfolio is a little bit too complicated. I'm not really a fan of SCHD or Alibaba or Disney, but overall, everyone's entitled to their opinion, and I don't see anything wrong with it. I think that it's a safe way to compound your money and to grow in the stock market without having that much volatility, and it's also well diversified. So overall, I don't see anything wrong with investing like this, and I feel that it was worthwhile to watch one of his videos.